Hello traders, this is Martin and welcome to another video. This one's titled 2 weeks till live trading, and that means trading with real money. So hope you guys are excited. We don't have a long way to go, okay? So now to find out if you're ready, I did something this past week you're not going to be happy with, but the lessons gained are invaluable. So what did I do? All of you took part in what I call a stress test, similar to a cardiac stress test that your doctor would give, measuring your heart rate, your blood pressure, and breathing ability to external stress. Some of you traders came through this past week's trading exercise seemingly well, but I'm sure I rattled the nerves of some others. So in this video, find out what I did and why this was necessary. You need to watch the entire video if you're going to learn the most important lesson of your trading career. Okay, guys, this is me once again, and my name is Martin, and I'm a proud Canadian trader. You can see that right here. And I've started up the ABC free Forex signals back in October of last year, and things are going fantastically well, and I'm getting a lot of new subscribers and as well as new traders who want to trade along with me and receive the free trade signals. So the only way I send out the signals, and again, this is free, guys. You have to send me your email address right here. You have to send me your email address, okay? And you would send it to here, my name and my email address, mskyj007@gmail.com. Okay, so I need you guys to send your email address, and then I'll put you on a VIP list, and I'll have more on this later on. Okay, so let's move on to the next slide here. And this is the really important part, guys. You can always pause the video and read this if you want. But again, this is my humble disclaimer, okay? My free signal service is an educational program only. I'm trying to teach you how to trade and not give you any specific investment advice. Don't blame me if you lose all your money. You probably weren't paying attention to what I'm teaching you, and you're not following my instructions. Remember, for now, you're trading on a demo account, okay? Demo account only, with a maximum 1% risk of your account balance. Okay, so that's important. You can trade with more, but again, try to manage your risk, and I suggest 1%. Okay, now before I talk about the stress test and something that I did for you this week, because I was testing your emotions and your anxiety levels, guys, and before we get into that, because that's part of our mini lesson, let's take a look at the 4 new trade signals for the past week. On March the 10th, I issued a buy British pound Swiss franc trade signal, and right now it's still open, so I want you guys to keep this trade open. We're not closing it down. We're in a small little loss position here, but okay, we're going to look at the charts for all of these trade signals in just a moment. Okay, so that's what happened on March the 10th. Now on that same day, I gave you another signal: sell Euro New Zealand. Okay, and I've got a little asterisk beside it, a little star. This was a loss, okay, and it was approximately 79 pips, and I want you to close this trade down because it crossed the DTL line, and I'll again review this in the on the charts. Now, this is a special mention here, guys, because I gave you this signal, but I normally would not have given you the signal, and the reason is because it's a poor quality signal. I'll show you what I mean in just a moment. Okay, so this is a poor quality. Normally I would not have sent this, and I wanted this to be part of the stress test, and I want to see how you guys did and managed to trade and so on. So we'll look at that chart in just a moment. Okay, now here on March 11th, I issued a buy British pound USD. This was an actual good signal, and I was actually surprised by the loss here, how it reversed. It did cross the DTL line. So for now, we want to close the trade. So that's one of my rules. When price crosses back or reverses back over the DTL line. And again, I'll show you that on the chart in a moment. And then on March 11th, we had a huge winner. It was a sell Euro Cad, big winner of approximately 141 pips. And by the way, it did reach our second profit level. Okay, again, we're going to look at the charts in just a moment. So pips won last week is approximately 101 pips because we're not going to include this into our official win-loss rate. And the reason is I would not have given you this trade signal anyways, okay? But I needed to do something to induce some stress and to get your anxiety levels going. And I did receive a lot of emails with regards to this week, which was a little bit off, right? Not a normal good trading week as far as wins are concerned. Okay, but even with this loss, let's say we had these two losses in a row, and this is important, guys. I need you to understand this. With these two losses, you can see right here the total pips lost is 119 pips. Okay, so that's the total pips lost if we would have counted the sell Euro New Zealand. But we did make 141, guys, okay? 141 was the win. And so we were left with approximately 22 pips as far as the week goes, and which makes this week still a winning week. So based on the rules, the trading rules here, okay, and other rules that we're soon going to get into next week, then you can see that you still had a winning week, and your risk was contained, and there's nothing to get excited about, okay? That's the whole point of this stress test, is for your emotions, to keep your emotions in check and not do anything crazy, okay? Just follow my instructions. Okay, so we're going to now continue. We're going to look at the first trade. This was the buy British pound Swiss franc. It was on March the 10th. Here's the information, guys. I gave you. It was a buy trade again. The entry, okay, for you new subscribers, entry was, you can see 1.29440 or better. And that means in case you're watching the charts, price goes down lower first, and then enter a buy trade at a lower price, okay? Now, I also gave you the stop loss. The first, take profit. The second, take profit. All you have to do is follow the instructions, take the trade, and there's more instructions down below. You can always pause the video and look at that. Normally, we enter each trade in two halves, okay? And that's what this refers to right here. So we're going to look at the chart, okay, and here we go. It's the buy British pound, Swiss franc, okay, and the trade, okay, let me just get my drawing tool. Here's the signal, guys, okay, there's a signal. So we would have entered the trade right here at 1.294040 according to instructions, okay, and that would have been like approximately there, okay. At the close of this candle, we always enter trades at the close of the daily candle. We're in the New York Eastern time zone, and the candles close at 5 p.m. Eastern Standard Time Zone. Okay, so we would, or you would open at just at the beginning of the new candle. Okay, but that's my entry, guys. Here's my stop loss. Okay, you can see well below the entry. Here's our first profit target, 129.89. Okay, and you can see. After here, let me just remove that. After we entered the trade, the next day there was a bit of a pullback. I call this a resting candle. We talked about this in our last week's video, if you want to go back to that, guys. And then you can see in this Friday, the final trading day, price did go up and came back down. It's still a bullish candle. But we just missing our first take profit target of 129.89 by just a few pips, guys. So the recommendation here for this trade is keep this trade open, do not close it, and let's see what happens if on Monday we can reach at least our first profit target. Okay, so let's get on to the onto the next trade, and let's see what we got here. Okay, so we're looking at the sell Euro New Zealand. Now this is the one, okay, this is the one where it was given to you as a weak signal. And when I say weak, I'll show you what I mean by weak and how I actually make the, how I analyze the trade signals before I send them out to you guys. But anyways, here it is. Here's the entry. It was a sell right here, 1.6576, okay, or better in case price goes higher first, okay, and then you would higher first, and then at a new entry, at a better entry, then you would take a sell trade, okay. So that's what we mean by that. Here's the stop loss, guys. The first take profit, the second take profit. Okay, so that's all given to you. All you have to do is follow the instructions, take the trade, and now we're going to go to the chart. Okay, so this is the sell Euro New Zealand. It was purposely given to you as a weak signal. Now, when I see weak signal, there was actually a signal, and I'll show you the signal. Okay, let me just get the drawing tool. On this date right here, there's the signal. You can see that, okay? And we would have entered right here at the close of that candle on that day. That was March the 10th, okay? So that would have been, let me see, the entry right there, okay, at the close of that candle, okay? And then you can see what happened the next day was a bit of a, nothing day. It was just a doji. But then on Friday, in our last trading day, price completely reversed, and it reversed over our DTL line. This is the DTL line right there, guys. Okay, that DTL stands for dominant trend line, and so you can see it actually was a big white bullish candle, went up to the upside. And we now want to close the trade since it went reversed back over the DTL. So the instructions are to close this trade, okay? And with this one you would have lost like approximately 79 pips. But that's okay, guys, because you see, at least we closed our trade. We contained the risk well before price went up to our stop loss. You see that? 1.6780. So here we closed it very early and we contained our loss. So that's one good thing about our system, that we do have rules in place and we do respect money management, and we're always looking at ways to contain the amount of our losses. Okay. Oh, now I know. I do want to go back and actually explain this at this point in time, why this was a poor quality trade, okay? So that's really important to know that. Now, do you remember in last week's video, and if you don't, you should go back and review it again. When I produce my signals that I send out to you, I do two completely different things. First of all, I analyze the individual currencies for strong versus the weak, for me to take advantage of that. And then the other thing is I look at my charts and the algorithm that's showing me the different energies, and they are the bias, like the overall market bias. Are we basically in a uptrend or a downtrend? The direction, the actual direction, again, trend direction, that's what I mean there by momentum. Momentum is really important to a trade, because without momentum is like the wind in a sail. So the sailboat can't move forward unless there's wind behind it. And that's what we mean by momentum. And then the cycle phase. Cycle phase is basically when price is moving in a trend or in a overall direction, price will go up, down, up, down, and all these up and down movements are what are known as the cycle phase. So we always have to know, are we in an up market cycle phase or down cycle phase? Okay, so that's what I mean with that. And again, you'll get all of this information more as we go along. This training, it's going to take a while, and that's important, but that's what I was using. And now specifically for that last trade, which I said was sent out to you purposely because it was a weak signal. I'm going to show you something now. I use this as one of my trading tools, guys. It's a currency kind of a strength meter, okay? But I want you to look at this line right there, okay? Okay, do you see this line right there, this vertical line? That was on March the 10th, where I was looking for signals to send out to you, and on right about this time, you can see the difference of strong versus weak between the New Zealand and the euro dollar. Okay, so the euro here is represented by the blue line. Okay, and you can see right here. Okay, let me just get right about here. You can see the euro's rising. Okay, rising in strength. Here you can see the New Zealand is falling. Now it was actually from this point on, a couple of days back, you can see it's coming down a bit, going sideways, coming back down again right here. So the New Zealand is falling in strength. The euro is rising. So you would expect that as the next day and the next couple of days go on, that the euro would be stronger and the New Zealand would be weaker. So remember, I issued the signal. It was the sell euro New Zealand, and in fact the opposite happened. And you can see here afterwards the euro kept rising in strength and the New Zealand dollar kept falling in strength. So here you can see there's a possibility they may cross, the euro may even cross higher above the New Zealand dollar. But this is the special tool, and like I said, I'm getting a lot of emails. A lot of these indicators and things I'm using, I will be making available to all of you at some point in time when I feel that it's ready to give this to you, so and make it available to you. So right now, I just want you to know when you look at the charts, this is what's happening now. But I look behind the scenes, and I look at this. I look at the strength to see if an actual currency, in this case here, the euro, is falling or rising at the time I make this. I make the signal, or in this case going sideways and coming down a bit. Okay, so this is a very important tool. I add this to my algorithm on the charts along with momentum and trend direction and bias and market phase, cycle phase. So that's how I get the signals to you guys, and that's why I've got a pretty good winning winning rate. Okay, let me just go on to the next slide now. Okay, the next one is the next trade here, buy British pound USD. You can see that here. It was a buy trade. Here's the entry, 1.3983. Stop loss, first take profit target, second take profit target right there, and then the instructions. Okay, so again, all you have to do is follow the instructions, take the trade, and put on your stop loss. It's always important to shortly after entering a trade, put in your stop loss. That way you're protected and you won't have to worry too much about if price goes down quite a ways. Okay, as long as you got your stop loss in place. And the other thing I do really, you really have to do is apply the first take profit target onto your chart so that you don't have to watch your computer all the time and when price could be hitting the first take profit target while you're sleeping. So it's always good to wake up and know that you're in profit. Okay, so that's that trade here. And let me go on to the charts and the buy British pound USD. Okay, so this was on March the 11th, guys, and you can see here this was the signal. Let me first of all show you the signal right there. Okay, everything lines up and it looks like there's momentum coming in the market now. This trade did not behave as I thought it would. I definitely thought it would go higher, and it didn't. It's retraced, come back down. You know what? Again, with this one, I'm not sure. It could, again, completely retrace and go back higher because the British pound generally is much stronger than the US dollar. Okay. And again, when I sent you out the signal, this was a good signal. It has reversed over the DTL line. You can see right there. Okay, this green thick line, green, red, thick line, that's the DTL. And so because it's crossed and reversed back down after our entry here, then we want to close the trade. So automatically close this trade. Those are my instructions. And we'll keep an eye on this British pound USD, and possibly there may be another entry because I believe the British pound is still strong. Whether it's strong against the USD, that's another matter, okay? It may not be. It may be strong by itself against some other currencies, but perhaps not against the USD, because I know the USD kind of is trying to rise in strength, but it's come back down again, and so you know the U.S. economy is still struggling. Okay, so let's get on to another trade. Okay, and this was the last one of the week. This was a sell Euro Cad, guys. Okay, just take a look. Here's a sell trade. Here's the entry 1.5021. Stop loss given to you. The first take profit, second take profit. Price has actually gone even past our second take profit. So you're in good results if you kept the trade open over the weekend. And that was part of my stress test. Were you guys closing your trade before the weekends, or even the losses, the previous losses, or have you kept them open? Anyways, if you kept this one open, you guys would have made a ton of money. It made a lot of pips. And let's get looking at the chart there. You can see, okay, so let me get my tool. Okay, so our entry, you can see 1.5021. It's a sell trade. We would have gotten in right here at the close of this candle, okay? And you can see right here with the arrows, that is my signal, guys. And right here, price went from here all the way down past our first take profit, even past this is our second take profit. And if you have the trade still open, I'm going to suggest right now close at least one half the trade, or close both. It's up to you. If you close only one half the trade, make sure you move the stop loss, okay? Make sure you move the stop loss from here to just a little bit past the break even, which is the 1.5021. Okay, so make sure again you move the stop loss if you want to keep your second half open. Okay, because here it is. Stop loss should be there. It can be 10-15 pips below this candle right here. Okay. And I think with this big, huge move, price may retrace on Monday, but I could be wrong. I mean, price could still be going further down. Okay, so it's up to you what you want to do. At least close your first half and move your stop loss a little bit past break even in case price goes back, and then you're still going to make a few pips on your second trade. But it's also good to close everything because this is a really good candle, guys. Okay, so that's what happened there. And now we're going to get on to our mini lesson. Okay, so the mini lesson, it's all about anxiety. And guys, the stress test, first, if you noticed, I gave you four trade signals in just over 2 days, right? I was not available Monday and Tuesday, but just over the course of 2 days, I gave you 4 signals. That's a lot of signals. That's a lot of a lot of signals to take care of. And I want to know, how did you manage the workload? Was it too much? Was it too much? Especially because you had to manage your trades. When it came to the risk factor, how did you manage the risk? I mean, with 4 trades, and if you would be trading with your allowed lot size, you would have been over the limit. You would have been over risking your position. So by the second 2 trades on the next day, you should have already reduced your overall lot size by at least half, and you still could have gotten into the trades. But anyways, this is something that we're going to work on over the next month or so. It's part of the free trade signals I will offer you. And guys, there's nothing more than I want than for you guys to be successful. Now, secondly, mentally, how did you react? How did you react when some of the trades started losing? Because at some point, the first 3 trade signals were losing, and I'm sure that would have caused some problems. Your anxiety levels might have risen a lot higher, and perhaps you thought that maybe something's off this week, right? Something's not right. Okay, so anyways, that's important because trading is all about anxiety. It's all about patience. It's all about controlling your emotions. And if you can't do that, you're not going to be ready to trade live. Okay. So now why did I do this? Okay. Why did I purposely give you the stress test? Okay. Well, first of all, going back since October 2020, when I first started giving you my free trade signals, remember, my main goal was to help you learn the process, right? That's the whole idea, because if you learn the process correctly, you're going to be able to trade correctly, and you're going to make money just like I am. So what is the process again? Just real quickly. The first thing, follow my instructions regarding and understanding my emails and my update emails, which usually come the next day. So when I issue an email with a new free signal, I will always follow up the next day with an update, right? So you have to read all the instructions, and that's really, really important, okay? Now, next, take all of my trades. Why? Well, the reason is because the ones you don't take are most likely the ones that give you the big winners, okay? And the ones you do take could be some of the losing trades. So this is why, to get a true representation of what I'm doing and a true representation of my worth and my knowledge, you have to take as many of my trades as possible, okay? Then trade on demo account only. Again, why? Because you never know what I'm going to do next. We're still in a learning phase, guys, and I've mentioned this to you maybe like hundreds of times. Trade only on demo for now, and I'll let you know when we're ready, and we're going to be ready in 2 weeks. Now, the stress test. Over the last month or so, I noticed that some traders are getting ahead of themselves, getting too cocky and confident, too complacent because of my high winning rate, and already started trading live with real money. So this is what I've noticed. And I know that because people do send me emails. They always let me know how they're doing and everything else. And sometimes, they're giving me information that gives me clues as to how they're trading and their success and everything else. And that's great. That's what I want. But I know that some of you are trading already with real money, and I've asked you not to. You're supposed to be trading on a demo account only. So could this be you? Could this be you? Oh, by the way, do any of you know what my winning rate is in the new year here? Not from last year, but for this new year. We started in January again, and I started issuing sending you the free signals. But it's actually the rate, my winning rate has actually gone up now, It's higher than when I started back in October of last year. And right now, I'm right at or just above the 80% win-loss rate. The first 2 months, I ended up with about 74% winning rate, but now we're about 80% and moving higher. Okay, so just letting you know, and I'm going to be producing another separate video just on the results over the last few months. I'll be doing that maybe at the end of March. Okay. Now, so this is important. I want you to understand this is what I found out. Other problems I've discovered, some traders choose which trades they're going to take or not. Okay, now why are you choosing? See, you're trying to guess the markets. You're trying to overguess what I'm doing and why I'm giving you the signals. And you're trying to guess which you think are the better signals. And that's a mistake, guys. I don't want you to do that because, again, I mentioned this, the ones that you miss or the ones that you choose not to trade most likely will be the biggest trades, okay? And therefore denying you the extra monies that you could have made. Some traders are closing their trades too early. Why is that? You have to, like in my updates, my email updates, I'll tell you when to close the trade, either in my emails or in my weekly videos, right? As I did today, right? But you're closing your trades because, again, you're second guessing. You're not trusting the process, guys, and you're going to have a problem with once you start trading with real money. So stop guessing. Stop trying to figure out the markets. You're not smarter than the markets, and and I'm not saying I'm perfect, but guys, I'm going to steer you in the right path, and I'll always tell you what to do. And then finally, guys, you're using a stop loss. What's the reason for a stop loss? It's to protect your money. Do you know that if you use your stop loss, the maximum amount of money you lose is just 1%? And so, like, keep that in mind, okay? This is really important. Some traders move their stop loss levels too early, okay? And that's part of what I just said. So don't do that, right? And I might have mixed something up here. I'm just going to backtrack just for a second. So you're closing your trades too early, which means that you're not waiting for the trades to move to the first take profit or to even the second take profit, okay? And that's really important, guys. When you see price going in your direction, you're making money, don't close your trade. Guys, it's really important to respect the take profit levels, especially the first take profit level, okay? So keep that in mind, okay? Now, next, I've discovered some good stuff though, guys. And again, the reason why I want everyone to keep sending me emails and giving me the feedback, because I obviously understand what you guys are trying to do. And there's a lot of good stuff out there. I'm getting some good comments and some good innovations. Now, what are they? Well, some traders are trading a hybrid method, okay? Hybrid means that it's a combination of my signals on the daily charts along with some of their own extra trades on shorter time frames. Now, obviously, if you have a little bit more time to spend on your computer, you can do this. So you can look at the lower time frames and take some extra trades, but these people are doing it on a hybrid method. So combining what I'm giving them along with some of their own decisions based on my instructions and trend direction. Okay, so that's great. Now, other traders are trading intraday or scalping, however, in the direction, right, in the direction of my trade signals. So if I give you a bullish trade signal, they're only scalping or day trading in a bullish manner, like taking buy trades, okay? If it's bearish, my signal is bearish, then they're taking only sell trades in the same direction as my signal. They are not reversing their trades. They're not looking for reversals. Again, that's one of the biggest no-nos in trading. Don't do reversal trading. So that's good news, guys. I'm glad to hear that. But the majority of traders are following my instructions as I send them. that is fantastic. Congratulations to all of you for following my instructions and learning the process, because that's exactly what the process is all about, right? Discipline and following my instructions. And they're telling me that they can taste success. They can taste success for the first time. So again, hands up to all of you. Congratulations. And we're going to continue. We're going to have a great ride as we get into the free trading. Okay. I'm sorry, as we get into the trading with real money in just a couple of weeks. Now, we're finished, guys. If you want to receive my free trade signals, especially the new people watching this video for the first time, you've got to send me your email address, okay? Send me your email address. I'll put you on my VIP list, and you send it right to here, guys. It's mskyj007 at gmail.com. So again, it's mskyj007 at gmail.com. Okay, so send it. Give me your first name. That's just courteous, guys, and let me know where you're from, what part of the world. Okay, so I really appreciate that. We're finished, guys. Cheers from Canada. Happy trading week. Hopefully you liked the video. Subscribe down below. Ring the bell to get the email. I'm sorry, the YouTube videos into your inbox, guys. You send me a comment too below the video. I'll reply to the comment, guys, and it's really important just to keep following what I'm doing. I look forward to next week's video, and after that, it'll be one more week till live trading with real money. So take care wherever you are, and bye for now.